Technical analysis is not a tool to predict the markets. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Today talking about technical analysis is not a tool for predicting the markets. I've had a few questions regarding indicators and what type of system I use and how indicators can be used to predict price action. And I just want to emphasize a couple of things with technical analysis. Now I use a moving average. I use the CCI, the 5-period CCI, and what I tend to look for, I talk about this in most of the videos, I look at the opening range of the week, Friday, Monday, Tuesday. I look for opportunities that are trending with the 20-period moving average, and I look for markets out of the 27 pairs. I look for pullbacks, I look for continuations, I look for top and bottom patterns that have already gave a first effort, and I, the old phrase, the second mouse gets the cheese. But important to understand with technical analysis is that it is not for predicting the markets. Technical analysis is a tool that you can use to identify possible trade triggers for your trade entry criteria. So it's something you can use, like I run a scan, for example, that brings up pin bar days. And whether that's pin bars long, pin bars short, I only trade them with the trend. And this week gave some beautiful trade setups with pin bars. That was a trigger that I run on the scan that brings up the possibility for me then to go to that market, look at the chart, but more importantly now, it gives me criteria that I can predefine my risk, so I can have a maximum point that I can identify as my stop loss. And number two, it gives me an opportunity to look at that trade setup and say, do I have an asymmetrical risk reward opportunity? So if I'm picked up into the market, is there a rectangle formation, or is there a bigger price pattern formation that's a compression pattern that once it breaks out or continues, will it give a measured expansion, 3, 4, 5 times what I'm risking? So number one, technical analysis is a tool you can use to identify possible trade trigger setups. Number two, it lets you predefine your risk and identify a profit target that is, 3, 4, 5 to 1. And so it's important to understand that technical analysis itself is not about predicting the markets. There's people out there who may say that. All it identifies is possible trend or trade setups. And so from that point, you're going to have losers in a lot of those trades. But if you're purely focused that that's a predictive tool, what'll happen is you'll throw your money management criteria out of the window. You'll get stopped out on trades. You'll be hesitant to take them again. You'll get shook out of the market. You'll get, you'll be up, you'll be down, but you won't have any continuity or consistency to that trading approach. And if you are, you'll probably end up getting chopped up unless you've got some other mechanism to filter your trade setups down. So you can predict where the market may be going, but that will maybe lead you down the river of, pain, I guess. But so it's important to understand technical analysis is a tool that you can use to identify possible trade setups, maximize your stop loss or your risk that you're going to be taking on the trade at a point in the market where if it hits that, it invalidates your whole hypothesis on the trade, and then having an asymmetrical risk reward opportunity. So a measured move or some sort of geometric expansion of that range that gives you 3, 4, 5 times your risk on the trade if it is indeed profitable. So hopefully you got some value and understanding from that, traders. Again, whatever approach you're using, I don't have a lot of indicators. I use those indicators on the charts purely so I can code them into my metastock and run scans. So I use price triggers and I use indicators to bring up scans, but my charts themselves don't have anything on them. I will go to the chart, I look at the Monday, Tuesday, Friday, Monday, opening range, the initial balance, the overall trend. I use rectangles, horizontal lines, monthly ATR, just basic stuff. I'm looking for to capture parts of the moves every month from some of those major pairs. If you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. Ritualize your daily routines, journaling, goal setting. Build a vision of the trader that you want to become. Work on your mindset daily. Set goals. Keep working in a direction of constant progress. Don't blow yourself up. Be patient. Be consistent. Master one component of your trading plan at a time. Keep getting better and stay on track with your trading. You get better at it. You trade bigger. You get smarter. You refine. You're going to make mistakes. We talk about this over and over again. My mantra is fail forward. I'm completely willing to continue to make mistakes as long as I'm making progress. So hopefully you got some value from today's video, traders. Technical analysis is not a tool for predicting the markets, but you can use that to help you identify possible areas to enter the market, to predefine your risk and place a maximum stop loss order, and identify asymmetrical profit targets that are going to put more in your pocket than you're risking on each trade. Stay focused, stay disciplined, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.